Oh, thank you, Sarah, very much for this introduction. And as you just mentioned, Sarah, now that 2023, we have seen so many ups and downs. Bulls were there, bears were there, tigers, falcons. Everybody was participating in this market. And it's interesting to see what are regulators doing, exchanges, indices providers, and all that stuff. I think we're shorter in time, so I'm gonna cut the introduction and start directly to the point. And Matthias and Anita, I would like you to give me an overview of what has been happening, whether from an exchange perspective or an index provider, over the past few years, how things have been developing. And let me start with you, Matthias, from a local perspective.
Well, thank you very much, Hussein. So yeah, it has been a very interesting and dynamic year. What we see here locally is tremendous demand for the Middle East, for IPOs, for investments. We have seen a clear shift. So just looked at the league tables this morning for IPOs, and I think it tells a very strong story. 40% of all the IPOs this year were actually in China, where Anita will talk about. 30% were in the US and Canada, and now, to probably surprise of most people here, 11% were in the Middle East. And out of these 11%, a total of 7% was here in Abu Dhabi. So, and what we see on the back of this and driving this is really the vision of connecting Abu Dhabi to the international financial markets. It's about driving liquidity, connecting investors, and obviously have a regulatory framework as well as a technology backbone that makes it easy to access Abu Dhabi, and ultimately also telling the story of the opportunity that is here and is very real indeed.
Interesting. Anita.
Yeah, I know that you actually want to talk about the latest development, but I want to take the opposite approach. I want to talk about history.
All right.
Yeah, as you know that we are the index compiler from Hong Kong, and actually back to 55 years ago, we focused on the Hong Kong stock market and we launched the Hang Seng Index. And then I think as time goes by, as the market evolved, and actually back to 30 years ago, in 1994, we launched the first China index. At that time, that is called Hang Seng China Enterprises Index. And at that time, because China companies started to come to Hong Kong for listing, and in the old days, the Hang Seng China Enterprises Index just included H shares. But actually, in terms of the index offering, we keep on evolving with the markets. So the market start to have various kinds of Chinese companies. They have the red chips, private enterprises. So the Hang Seng China Enterprises Index keep on evolving to include actually every kind of Chinese companies coming to Hong Kong. So that is what happened 30 years ago. And then I think back to 15 years ago, what happened is that I think back to 15 years ago, about 2007, we already anticipate the global investors and the institutional investors is actually going to increase their allocations to China. So that's why in 15 years ago, the Hang Seng Indexes Company also started to launch index covering A-share as well, because the market is also starting to open up. Okay, so at that time, we mainly focused on the Shanghai and Shenzhen Stock Exchange. And back to your question, the latest development. So this is something really happened early this month. Is we already obtained the data license from the Beijing Stock Exchange. So all of you know that Beijing Stock Exchange is the third exchange in the China. And nowadays, Hang Seng Indexes is the only one offshore index compiler that can provide the comprehensive coverage for the China exchange data. Because we understand that the institutional investors from the overseas perspective is a little bit complicated to understand China because we have so many exchanges, we have different class of shares, but we hope that what we are trying to do can help. And I think the magic, okay, in terms of why the power of having such comprehensive coverage can eventually be amplified because of exactly the role of Hong Kong as the super connector. So probably you know that 10 years ago, Hong Kong started to have the Stock Connect program, which overseas investors can getting more easier to access the Asia market. And on the other hand, the mainland investors also get easier to come out and then to invest in the Hong Kong shares. And the latest development again is something happened in July last year. They have the ETF Connect. Or you can see that they actually put the ETF under the Stock Connect. So that means the international investors can easier to get access to more Asia ETF listing onshore. And on the other hand, mainland investors can also be more easy to get access to the Hong Kong listed ETF. Indeed, it's actually echoing your keyword, connect. So actually, this is helping the two markets to connect and also to help the overall market trading and liquidity.
Interesting. I think I've been covering this in my news show at CNBC with the latest development, Anita. And another thing I was covering also on CNBC is the growth of the IPOs that we have seen in Abu Dhabi over the past 2 years. But the big question was for, I think that this is not my question, but for so many investors, can we sustain this amount of IPOs that have been coming to ADX?
I think it's a great question, and maybe I take a quick step back and reflect on the IPOs. So first and foremost, to put things into perspective, the IPOs we had over the last 2 years were on average 50 times oversubscribed. They were trading 30% up on the first day of trading and continue to trade on that level. And we see huge demand from international investors to participate. And the reason why the performance is so good is because the underlying assets that the government, the leadership, and part of the sovereign wealth funds brings here is the quality of the asset on a wide range. So to answer your question, I think we are very positive and bullish about the years to come. We have a strong pipeline. And in order to keep the momentum going, it is, to come back to Anita's point, a key point is and will be to connect ADX, Abu Dhabi Capital Market, to the world, to other global investors, in order to keep that strong demand. We know that on the supply side, there is a continuous strong pipeline coming in Abu Dhabi.
Just on this point, does it mean that we're going to see more of dual listings?
Yes, we will see dual listings for sure. You might have seen very recently that we entered an agreement 1.5 months ago with Boney Mellon. Boney Mellon is the largest custodian in the world. This gives us the ability to pretty much anywhere in the world have a dual listing. We see very strong demand, particularly from the East, to dual list and tap the capital markets. And since we have now the technology in place, we will push for this.
Awesome. Anita, back to you, and this time on Fintech. I think things have been moving so fast. Over the past 2 weeks, we were very busy covering OpenAI and ChatGPT and what have been happening at the firm over there. But now we want to know, how are you implementing and innovating your core engineer at the Hang Seng indices?
I think in short, I would say technology nowadays is king. So I think in the past few years, even that's the pandemic time, we never stopped investing in our IT and also never stopped investing in our infrastructure. First thing is that actually this year we started to have the cloud-first strategy. That means we move our index system as well to the cloud-native environment. And the other thing is, in terms of the database, we actually also trying to use the cloud technology to consolidate the scattered database into one database to enhance the overall lower the cost, enhance the efficiency and everything. And other than the cloud, we actually also using the AI, especially we use the NLP, that is the natural language processing algorithm technology. So this technology is very powerful and also helpful to the index company, especially when we need to do the thematic index. So probably share with you some figures, is that in terms of the mainland ETF market, they have more than 800 ETFs already. And the key trend trend that what they are doing in terms of the product development is to have the thematic index. So once we have the NLP, this kind of AI technology, we can actually quicker to identify the theme so that to help the market to provide the better thematic solutions to help their product development. And the other area is that we also work closely with the Fintech. Say, for example, for the smart beta indexes, we need a lot of the quant model to have this kind of the backtesting technology. So I think we also work very closely with the Fintech. Nowadays, I think finance company need to have a lot of the technology elements. Otherwise, I think the business model may not be sustainable.
Awesome. Matthias, so Anita just touched on ETFs, and I think Abu Dhabi Exchange have also been keen in launching ETFs. I would like to know, how are these ETFs helping or bringing in more maybe foreign direct investments or liquidity into the market, along with other products that you may be using as well nowadays in order to allow investors probably to hedge their portfolios or to do something that were not possible before?
Yes, no, thank you. So ETF is an important part of our strategy to broaden and deepen the market. ETF goes together with a lot of other initiatives, be it derivatives, stock lending, borrowing, algo trading, and other initiatives. Now, the ETF has been a great success. 44% of all ETFs in the GCC are listed on ADX. We're also the most liquid. What we have seen as well is, because we are not as an advanced market as Hong Kong, that key around ETF is education. It is part of our role as an exchange to educate the market participants. How does an ETF work? How to best use it? But also to tell the story, importantly, to the retail investors. And we see further products being pushed next year, but always together with strong educational aspect around what these products mean and how to use them.
Fantastic. And Anita, when we come to regulatory issues, China have been opening the market for so many years now, and every year we learn about the new regulations. What's next now?
I think the Hong Kong market and the China market is very dynamic. They keep on evolving, actually. I think echoing what you're asking, I think three perspective I would like to share. The first one is about the listing regimes. So indeed, the Hong Kong Exchange keep on evolving their listing regimes. I think they welcome nowadays for foreign companies, secondary listed companies, weighted voting rights, pre-revenue biotech, so on and so forth. So you can see they keep on evolving to attract more IPO coming to Hong Kong. So this is the listing regimes. And the other one is about the renminbi internationalization. Actually, last week, the Hong Kong regulator, SFC, announced that the China Treasury bond futures contract is coming to Hong Kong, and Hong Kong EX is working on that for now. So this is one way to help the renminbi internationalization. And the other one is mid this year, Hong Kong EX also launched the kind of the Hong Kong dollar renminbi dual counter, which means one-stop listing in Hong Kong can have two counter. One is Hong Kong dollar and one is renminbi counter. Yeah. So this is still in the very early stage. The renminbi counter's liquidity is yet to be built. But I think that if the direction is correct, then I think it takes time to build the liquidity. And when the market is ready, we can also launch these kind of indexes to support the renminbi internationalization. And the last one I want to say is that in Hong Kong, in terms of all the development, connectivity is something very important. So I think nowadays in Hong Kong, we have the Stock Connect, we have the ETF Connect, Bond Connect, Swap Connect, actually various kind of connect. So for this kind of connect program, we actually, what we want to help is to increase the accessibility of different market. And the index compiler will try to play a role here to facilitate all the connects can be very efficient and also to help the expand the investor base. I think this is something the listed company wants the most.
Awesome. You know, I had so many other questions to bring, but as I can see here, our time is over. So maybe I'll take it to my CNBC show next to continue this conversation. But thank you very much, Anita.
Thank you very much.